Hello, welcome to today's price review. Today is Wednesday, November the 5th, 2025. Before we go into what I traded, what I looked into, what I was anticipating earlier before this successful trade, here is a risk disclaimer. Trading Nasdaq and other financial instruments involves significant risk and may result in the loss of your capital. All content on this channel is for educational purposes only and should not be considered financial advice. Past performance does not guarantee future results. Always trade responsibly and seek professional advice when needed. Thank you. So when I came on my charts, the first thing I wanted to do was I was waiting for time. I needed time, to be right in order to engage price. So I said I was going to trade the 2:50 p.m. to 3 p.m. macro. Okay. So they tend to be in macro towards the last minutes of an hour into the next hour. So like 2:50 to 3 p.m. there's a macro that price you know, may deliver on, right? That the algorithm could deliver on. And sometimes as well, it could be the early 10 minutes into a new hour. So say a macro could kick in from 3 a.m. to 3:10 a. Oh my, yes, 3 a.m. to, but I'm talking about the afternoon session now, which is the 3 p.m. to 3:10 a.m. So sometimes you could see a macro that kicks all the way from 2:50 p.m. to 3:10 p.m. or 2:50 p.m. to 3 o'clock p.m. So it depends on if the place where you have your take profit has been engaged already, but then it is good to abort your trade within any of that time frame. Be the three, that's if price has not gotten to your TP yet, or with price it can act as it wants to sometimes. But then what I had in mind was I'm going to trade the 250 to 3 p.m. macro. So I had this on my chart, and when I came on, you see these three down close candles, right? All of this price action has not formed yet. So let's just act like you cannot see these ones for now. So let's just pay attention to these ones. So this looks like an order block that's about to form. So how it's maybe is that this particular candle could be a massive bullish candle that trades past this area and closes with full body, not like leaving a week or a very significant week. Well, it could leave a week but not a very significant week, just something like this one here. And then you see price trade back into possibly the high, okay, of this area, or you could even trade to this area and then move back higher. And then you can now see price run, continue in that direction. That's reaching for higher prices. Now, when you look above here, you would see today's 12 a.m. open. So my what I was expecting was that, okay, price has done this thing whereby it traded into this level here. It rejected at the high. This is the fair value gap from the 15-minute time frame. It rejected at the high of this 15-minute time frame, and then you could see the next up close candle did not even leave a week, did not even trade into, just reacted to the top of this 15 minutes fair value gap and then move all the way high. So it was only logical to me at the time to expect that once it's 250 with price coming in, there's volatility due to the algorithm doing its thing, right? Price could move higher, like immediately all the way to today's 12 a.m. open. But this was not even where I wanted to see price reach into. I wanted to see price reach into this new week opening gap because it's almost 3 p.m., 4 p.m., 5 p.m. the market closes. So I was like, yeah, I know definitely there'll be consolidation before it gets to this area. But this was my ideal draw on liquidity. The new week opening gap, any area here. But I was like, where I would like to see price get to is I wanted to get to this new week opening gap. But if I was in a trade and price moves all the way to this Friday to this past Friday's close, right? I'm going to take profit here. Okay, if you move past 12, today's 12 a.m. open, I'll just move my stop loss all the way to that area. So even if it retraces, I'll just go out. Okay, because this today's 12 a.m. open, most times a draw on that 12 a.m. open is a very good place for you to take profit, depending on what you're looking at, depending on your trade setups and your trade rules. Okay, now at the time there's a fair value gap. I used to engage price here. Let me go to 15 minutes and show you. Okay, now I'm going to, you see this particular area here, I traded somewhere. Yeah, I think this was the trade I took there yesterday. So when price was, around that area, I had to go back to, I didn't use this one at the time. This was on the chart, but I wasn't even considering it because to me I feel like price has already traded into it, with all of this price action then. So I didn't really put much consideration into it. I said, okay, let me work with this one here. So I'm going to take out this one just for, oh, excuse me. I'm going to go back to 5 minutes time frame now. Okay, so I'll take this out for now. I'll bring it back. So imagine, having watched this form and then you're thinking that in this candle, this 250 candle now would move, since our biases bullish here. So I'm like, it would be ideal for me to buy, anywhere around here. I was working with a dealing range from the past, but that dealing range, now that I think about it, it was not a very good dealing range. It was more like I forced it to be a dealing range because I needed a dealing range to work with. So let me not bring in a lot of confusion by trying to draw what I did at the time. No, let me just focus on a clear chart. This one is not as clear as it should be, but you get my point. You know what I'm talking about. Let's just work with this one here. So I was like, okay, this is cool, right? I want to buy here anywhere within this fair value gap from the past. So once it was, I watched 445 candle here on the 5 minute time frame. It closed at the upper quadrant of the fair value gap. Like, yeah, that is good. So I immediately opened a position here. Okay, but then price filled me somewhere higher. Okay, somewhere higher there. Anyways, so I was like, okay, so price now move quickly like you would do since it's a macro. And it did not do that till it was just dangling around that area. Once I saw that, I knew that there's something off with this trade. But because I had set my mind already that I want to see a draw on the new week opening gap, I decided to just hold on to the trade. So I'm going to turn on the executions and show you what it was like. Okay. So I went long at 25,770. Okay. So I went long somewhere here. Okay. And then I exited. That's where, price filled me in there and took my stop at 25,745. Yeah, this particular candle slow. So this is what it looks like. I will bring out the shorts. All right, so it filled me in here. Okay, and then took me out. Yeah. All right, and then this was me. I had take profit there Friday's close. Okay, but then I was still down for today's 12 a.m. open. Very, very like down for that area there because that's about 50 pips, which makes a lot of sense as well. So now you can see what I was looking at the time. Now, how come about this? Now you've seen that I'm going to just take it out. So let's just show you what it looks like at the time. All right. So I had to call out this level because when this whole thing, this whole down close candle was forming, you would notice that this particular high seems to be on the same plane with this particular candle's high. But when you look at it well, you would see that it's not exactly. This one is still a bit higher. I've seen candles like this in the past, like a lot of time. And when you see something like this, if let's say like my narrative was bullish, that with candles like this, it's very important to start reconsidering that bias because most times it tends to, you know, show a shift coming into the market. Okay, so since it has been in an uptrend, possibly a downtrend could be about to happen. Okay, yeah, so that was it, but I didn't really put, I was not thinking about it that much because I was like waiting for, 3 o'clock for me to exit the trade. So I was like, anything could happen within these few minutes that is left. But then I still held on. I'm like, okay, let me just hold on to what 310, okay, to 310. So since it didn't move that much, since it didn't even go anywhere between 250 to 3. So from 3 to 315 or 310, it would do something. So that's what I was thinking, yeah. And so I called out this level because I was like, I don't want to see price move lower into the consequent encroachment of this fair value gap. That's the midpoint of this fair value gap. But it did that, and then you can see how it closed higher at the upper quadrant there. So I was like, okay, this is still good. Let me hold on. Okay, and I was just watching the candles. Then this one broke. Immediately this candle came down. I was now second guessing my choice, like, should I exit it? I'm like, okay, let me just wait. Let me just observe what exactly he wanted to do. So I think that was the time I had to take this fair value gap out because I needed to work with what I could see in the chart, live and direct. Okay, that's how we have this one. Yeah. Okay. So price broke lower. I was like, okay, okay, I like that. It's showing me its hands. So I really want to go down, but me, I really want price to go up. Yo, that was like what was going on in my mind. And so I didn't want to see price come down to this area. But I guess at the time, okay, yeah, I just said I had my stop loss here. So I got stopped out. I got stopped out. So it was really fast. I got stopped out. Uh-huh. So, anyways, once that happened, I checked it was 325 at the time when I got stopped out. 325. So I said to myself that I'm not going to say, oh, since this has clearly shown me that price is now bearish, I'm not just going to jump in. I would take a chill, a break and just relax and watch what it wants to do. Then when it's almost 350, I would now, when it's time for a 350 to 4 o'clock macro, then I'll come to see if there's an opportunity for me to engage price. So that was just my resolve. So I've been taken out of the market. I said, okay, let me wait and see what next would happen. All right, so you can see that the start of this run that would have been a potential, uptrend is this particular candle here. So I already considered that to be an order block for me now, a bearish order block for me. So this next candle dropped lower, and then it didn't really form much of a displacement candle. So I was like, okay, let me just see what it's going to do next. I have my 15-minute time frame on the chart. You see here, this one here, this orange is for 5 minutes and the blue is for 1 hour. Okay, so I watched it, it dropped. Now I've seen the candle I'm looking for. Can you see the displacement? This down close candle that came, it's massive and it looks like a really good candle. Okay, there's no big key thing around it or a rejection like this one. It's a full blown down close candle. So I said, oh, this is now a bearish order block. I don't want to see price, come above that area. Where did I call this level out from? I think it's from the 15 minutes. Let me quickly take a look. I'll take it out if unnecessary. Okay, yes. So I was watching. So when this candle now was forming, yeah. So with this already, it has already shown me, especially on the 1 hour, it was very clear as daylight that there's a shift in market structure now. Okay, there's a shift in market structure. So I'm already out of the trade, but I didn't want to engage. I didn't want to open no position, so I don't act out of aggression and fear. I need to work with a clear mind, a clear mind. So I watched this area here, and then this particular candle dropped. Okay, dropped into this candle here. It dropped, and you can see this immediate rebalance that happened there. The next candle left a wick, failed to reach into the open of this candle here, but it left a wick just somewhere around that same level there. Can you see? To me, this is an immediate rebalance. You can see the wick here. You can see this one. Can you see how the body of the candle opened below this 15 minutes fair value gap? So this wick that went up was an opportunity to sell at what premium. Okay, so once you've seen that, where is what is the nearest or the lowest hanging fruits that one can reach into this area here, right? So I was like, okay, now so price is going to draw all the way to engage this particular swing low. And just below the swing low, what we have the Monday 12 a.m. open. This was from Monday. Okay, this is price action from the past, not even from like this past Monday. I think 27th of October, the last Monday of the last week of October. Yes, and then okay, yeah. So you see that one there. I'm going to take that off. Okay, but then you see the rebalance that happened there, right? I will talk about rebalance a lot because I like to look at it when I'm analyzing price. It gives me, it just helps me to make better decisions. I guess that's what the word would be. Anyway, so when I saw that rejection there and then the body of the candle, closing even lower below the fair value, I was like, that's my sign. So I needed to see what it looks like on the 1 hour time frame. So now on the 1 hour time frame, you can see 1, 2, 3. You can see the fair value gap I called out there. Yeah. So I needed to see price trading to that fair value gap. I needed to see another price, trading back up at least to the midpoint of the fair value gap, so I can open a sell position. Okay. Yeah. So I'll just go back now. All right. Okay. So let me toggle on. Yeah. So that's what happened. So it's 340, then 345. Okay. So this particular candle has already formed at what time? At 345, and then the next candle would be this one. So I needed to see can price trade back up at least into the midpoint of the fair value gap of this fair value gap from the 1 hour time frame, so I can open my position. And then where is the best ideal place to have my high? Excuse me. I want to see. I want to make sure that I'm getting. Since I've been moving these things around, I could have altered some of the price levels. So let me be sure where it was. This is I sold twice. Oh my god, two lot size. I wouldn't do that. I would do that, but again, this is a demo. This is a demo trade, okay? This is a demo trade. I forgot to say that much earlier, but this is a demo trade. I sold at 25,695. 25,695. 25,695. Yeah. Yeah, so okay. So my position was entered at, exactly here, that place here. But my intention was to, sell at the fair value gap. But you know how price can be now. Spread will just feel you somewhere closer to where you intended. Quickly charging my device. Okay. All right. So that's where I got filled. Just at just beneath the fair value gap. Interesting. Anyways, I had my stop loss. I'm going to take that out. Okay, so I had my stop loss at this candles were high. Okay, so you see where we have this high, we have this open, and we have this close. Can you see the high, the open, the close? That area there, the immediate rebalance has happened. Okay, so I didn't want to see price get. I was just hoping that price would not get there. I didn't believe that price is going to get back to that place because we already have the price that's already traded around that area. So yeah, I felt I was good to go. So now you can see the nearest hanging fruit is this level, yeah. Where is the next hanging fruit again? Would be this one. Can you see this higher low, lower low, higher low? And so remember that if you watch my past video, you would know that I like to see a draw to the Monday 12 a.m. open, Sunday 6 p.m. open, something open, high, close, like that. But majorly, if it's a draw on liquidity, I like it to be a 12 a.m. open or a 6 p.m. open. So, and we have one there, and we have this. I also know that price is likely to reach into this Sunday 6 p.m. open here, and this is not like Monday, this the day before yesterday, not that one. This is from 27th. This is 27th October 2025. So we have the 6 p.m. open first before the 12 a.m. open. So this is 27th of October. Okay. All right. So here we have another block here. But I didn't really pay attention to it because my focus was the Monday 12 a.m. open. That was when I wanted to see a draw. But then there's another block here. Can you see? There. The price is likely going to trade into. So, but then I didn't want to concern myself with all that. I was more into nearest hanging, the lowest hanging fruit on the or then the next one, or somewhat, if I really want to stretch the bit to just be to the midpoint of this fair value gap here, or from the 5 minute time frame, and I'm done. I was not going to wait for it to get the Sunday 6 p.m. open, even if it wants to really get there. And that was exactly what happened. So I'm just going to take you through what that looks like while trading it, while looking at it live. So let's watch it together. So this is a London Q zone high from Tuesday yesterday. Today's Wednesday, yeah, yesterday. So I saw it at the left side of my chart, but I just decided to bring it back because most times I like to see how the body of candles, the wick of candles is reacting around that area, and you can see this particular candle closed at that price level. This one it closed at that price level, and then the next one almost failed to reach into that level again. So I don't know, it feels very important to me. So if I'd called that a level during my trade the previous day, I would just extend it if price gets to that within that area, the next day. Just that way, I use all of those things together to make an informed decision. So you just experience to tell you what is better for you, or what your eyes can see easily, and then you work with that. So I'm going to the 1 minute time frame now. So see what price is doing here. Okay, this is a 15-minute time frame. And I wanted to see how the projection was, and it looked fine. It looked fine. Then I noticed the fair value gap Yeah. Yeah. So one of the reasons why I drew out this fair value gap was that I wanted to see how price would react within that fair value gap. So I'll be able to spot a retracement or a reversal. Okay. And also to know where exactly to move my stop loss to. Because right now you can see that price has already, is almost close to the lowest hanging fruit. And sometimes you could decide that, oh, I'm just going to tag that this level and not, come lower. So it can do anything that it wants to do. So I need to, know how to respond within that fair value gap. Then this is the 5 minute time frame. So I was also watching time, okay? Watching time to see how long it will take for this particular candle to close, okay? Where it will close within that time period. Will it close within the fair value gap, or will it leave a week and stuff? So I needed to see all of those things. So I had to go to the 1 minute time frame to see if I can spot any retracement. And you can see at the time it was just few minutes to 4 p.m. For few seconds to 4 p.m. at the time. So I really needed to exit at 4 p.m. on the dot. Okay. Because sometimes you can just see a sharp rejection or just come out from nowhere. Or sharp candle just come out from nowhere and just take you out. So just have to be very alert. Okay, so you can see that Monday 12 a.m. open. Okay. And then when I have my stop loss, my take profit slightly below that level there. I had it at the low of this area here, just where we have this low and the high of the candle that makes this other block. That's where I had it. So price now, you see price has really traded into the Monday 12 a.m. open. So if I had my TP there, I would be out of the market here, but I still needed more. I needed a little more, so I held on. And so when I saw this, so I had to go back to the 1 minute time frame to be sure that a reversal had not started already, because this was already 4 p.m. Okay, so when you're trading macros, you need to pay attention to time, because you could be there watching price. See, I just moved my stop loss now to the high of this candle. Okay, you want to joke around with it, and then beautifully enough, it formed this indecision candle, and I like that. And like the fact that the candle was lower. This tiny body was even lower than that area there. I knew that it was going to come down and sign me out. Yeah, so see it. See, price retested that level again. See, I had to be another thing to do. So I moved my stop loss to the high of that candle, and then it engaged the big profit. So yeah, that was that. I think I had to. So it's going to react. Yeah, so I have to call at that level just to see how price also react to it as well. Yeah. So you see it got to the midpoint of the fair value gap for the Sunday 6 period. Yeah, it may reach into that area there. Yeah, so that was me saying that if price could reach into the Sunday 6 p.m. open as well. But then I was not interested in all of that. Price already gave me 60 pips, so that was good business. And then you can see the macro at the time. I guess this is from the recording. Yes, you can see this was 4:01. Can you see the time? 4:01. So let's be out. So let's analyze this price. And there's also action. A macro from 4 to 4 next video as well. So yeah, so that's just all for the execution. Yeah, and then what happened next? Can you see this is the candle that took me out? And can you see when the candle closed? See how it closed. It now looked more like a, an up close candle later on. But then because the price has not done all it wanted to do, it say return back. But I was not going to stay back, because imagine I was in the trade at this time, I would have closed in a place that was higher, that was, lesser than what I would have made. So sometimes it's just worth it to exit with time. If you're unsure on where to take profits, work with time. Once you see that time period for the macro is almost over, just exit. Let's say um you're trading 250 to 3 p.m. Sorry, the 350 to 4 p.m. macro, right? 3:57 p.m. is okay for you to exit. Most times 3:57 price would have made the high of that particular candle that is being traded at the time. Let's say on the 5 minute time frame, or even on the 1 minute time frame. 3:57, 3:56, very ideal time. But mine was already closed now, so I just knew that price would still come back below that Monday 12 a.m. Why? Because there's a fair value gap beneath that area, and then just beneath that area there's an order block, and then beneath that order block there's a Sunday 6 p.m. open. So you see all of those things there, they're giving me more conviction, and that was what price. The price traded down almost into the area, almost. Well, you can see it was respecting the fair value gap which was here. Okay, it was respecting the fair value gap which was there, and then went back to that area and closed at that Monday 12 a.m. open of 27th October 2025. Can you see how? You see, that's one of the things I like ICC concept, because of how precise it is. It's less confusing, and no, honestly, the concept is just too good. It's just too good. So that's all for. Okay, let me quickly just take you through today's news. So at 8:15, this week there's NFP this week. This week's Friday is the first Friday of the month, so there's NFP. So there's an high impact news 8:50. I was not on my chat during all of this time. I came on at that 2, so around 2ish that I came and set out the things that I wanted to see price react to and stuff. So I didn't really think much about the news. I just worked with what I could see on my charts. Yeah, so that's it. Thank you so much for watching. If you like the video, kindly like it and subscribe to my channel for more videos on price review like this one. Okay, thank you. See you in the next one. Bye.